Today is Tuesday, 29th of July 2025, and we are gapping up above the moving average for context. And on the 15 minutes chart, we are just moving, trending up since the open of the day. So, this market is a trending market, as we already know. You remember, this is what I pointed out yesterday, that we have an inefficiency on a 15 minutes time frame, and that inefficiency got filled. We are retesting that inefficiency. I'm going to remove this now. Okay, some things to in mind while taking a reference. This is the first 15 minutes candle. This candle is imbalanced. There's basically a 95% chance that we are going to take the low of the first candle. We have uh, we have a balanced candle on the Qs, but imbalance on the regular electronic trading hours. I am waiting for the first 15 minutes to close. I'm gonna take a trade based on how the first 15 minutes will close, aiming for 1 to 1 to reward ratio. 1 to 1 to reward ratio, some things to keep in mind. That is. First, I'm going to mark a standard deviation of the 4 hours. Standard deviation for or the reference point for the 4 hours is 426, 23,426, 23,000. Let's open the 4 hours time frame. 426. Four 26. We got that now. And 295. These are the levels. I'm going to remove the yesterday's drawings. Yesterday, kachra. 295. 295. 1, 3, this is a strong candle. We can just complete this standard deviation towards 630. We can just move upwards. But still, I'm going to wait for how the first 15 minutes are going to close. Then I'll trade. Coming back to the 15 minutes time frame. This is a strong 15 minutes. I am not interested in taking any sorts of shorts. You can see that on a 15 minutes, this if we closed above the previous week's high, that is giving a validation on a 15 minutes that we are more bullish and bearish rather than bearish. Acha. Next thing I'm going to mark is just several reference points. We still have time, so why not make things more clear? 433. This is going to go. This is an error. 396. Okay, now the first 15 or 5 minutes are closed. Let's see if we get a follow through or not. We are far above the moving average on 5 minutes on the regular trading hours. If I go to 1 minute, we are really far above even the 1 minute 20 period moving average. So this is not sustainable. This is not sustainable. If I take a standard deviation of this move, previous day high, previous day low, and I will mark yesterday's high and low on the regular trading hours. We still have 7 minutes until the first initial range. Previous day high and previous day low. Coming back to the 5 minutes. Five. This is strong follow through if we close at the high of the next 15 minutes. This 5 minutes candle close at the high. This is a good follow through, and we can expect a second leg up. On a 1 minute, this is how it looks. The first leg, second leg on 5 minutes. Twenty-nine seconds till the first 5 minutes will close. If it closes at it above the 50%, it's good enough for a second leg. If I take a standard deviation of the first candle, we're very close to the 50% of the first candle. Let's see how this 15 minutes close and last 5 minutes can close. Depending on the range of the first 15 minutes, which is uh, it's like 57 points. Do we have news today? Yeah, we have job openings, job openings. Mario, anytime, brother, anytime. 15 minutes are about to close in 3 minutes. 3 minutes. Okay, what is the criteria? What is the criteria for going short? Generally speaking, I need a close below. Did you see this point? We never got. Okay, this is more clear here. We never closed above this high, right? We closed here. This is the validation. This is the validating candle. You see this wick. You see this wick. Wick, 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 wick. So this is the candle what is holding price. If price closes below this candle, then there is a probability higher than 50% that we are going down. Okay. It can come down to this point, but still it would be an uptrend, a valid uptrend, right? If it closes below this point, the 936 candle, if it closes below this candle, then it can potentially be sideways or a down or 50-50, basically sideways or down, right? How much time do we have till the first 15 minutes will close? We have about 2 minutes till the first 15 minutes will close. If it closes at or above its 50% range, we are very close to the 50% range, which is 484, then it's likely to give us a second leg, slightly second leg up, taking out the high of the first 15 minutes and like a little more high. This is what is going to make or break the continuation. 469, 469. Okay, let's see how this is. This was validated. You see this point, the low of the previous 15. If we close below the low of this previous 15 minutes, then it's likely be a 50-50 chance, and we can chop, chop, chop until it breaks towards one side. 30 seconds. This is the likely be the first 15 minutes range. This is the first 15 minutes range. Border, border, border. And this color. Oh, last 8 seconds. If we close above this candle's low, nah, we didn't. I am going to drag this till 11 o'clock, aka the 18th bar of the day. This is also indicating the high or the low of the day. I am also going to mark the first 15 minutes range. 470. 470 is the key level. On a 1 minute, it's not looking very good. On a 1 minute, you close this. This is a strong close. That was a strong close. Other than that, every close was behind any wick, right? This is a strong close for the Bears. Bears close, 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 close. So this is 50-50 chance now. We might touch the moving average now. Moving average or 570. Let's see how the price reacts to it at 570. 569.58, 569.58. Okay, we are reacting off of that level. Bulls who sold the close of this bar, they will get out at break even. They are in profit, right? Bulls who bought around this point, they got out at profit. Bears who sold the low of the second bar, their stop is about this high, and they are expecting a target of. Bears do know that the bulls who bought the open will get out. So bears are also likely to get out around the low of this bar, low or the open. Bears have gotten were very close to get their 1-to-1 risk reward ratio. Bears got the first risk to reward ratio. Okay, my turn. Can I target the moving average? Yes, I can. If we this is the general idea. I'll place a pending order here. I need a closing on a 1 minute here. I need a closing on a 1 minute. Just I have to be cognizant that we are where we are very close to the news. 10 minutes till the news will come out. I have gotten my 1-to-1 risk reward ratio. I am running this till here. So this is good. It's good. Really good. We might touch this point. Okay. We have gotten 1 to 1 risk to reward ratio right around this point. Okay. The bears who sold the low of the opening, right? They are expecting their 1 to 1 risk to reward ratio right around this point, slightly above the moving average, slightly above the previous day high. Understand? Acha, now we have a problem. We have a problem at 948, 949, 948, and 949 is somewhat of a problem. We are bouncing off the 4 hours standard deviation. Already gotten the risk to reward 1 to 1. Bears who sold with a stop order, placing their stop right above this point, their risk to reward 1 to 1 is right around this point. Bulls who bought the low of this bar, they'll buy a standard deviation lower. Did we get a closing below the range? Yes, we did. This is a fairly climactic bar on the 1 minute 950 candle. This is a climactic bar. Unless we get above this point and close above 950 on a 1 minute, I am still obviously not looking to buy it. But generally speaking, since we are below the initial range, right? I'm using this as a reference point of the bear strength. As long as we are below this or we are staying within this range, it can chop all at once. We are below and we have closed below the previous day high. Yeah, we closed below the previous day high on a 1 minute. This is electronic trading hours and this is regular trading hours. We closed below the previous day high on the electronic. We might touch the previous day high on the regular trading hours also. We have the potential. So we are 6 minutes away from what the news. We are 6 minutes away from the news. Market is struggling to close above the previous day high on the electronic. 2 bars up, 2 bars down. Let's see how the next 15 seconds close. This can be first push down, second push down, third push down, and some sort of a wedge here. Some sort of a wedge. This is a fairly disappointing bar for the Bears, but still, is it a good bar to buy above, putting like stop entry long? I don't think so. It's a good buy. This might feel like a trap, but it's not a good buy. It will increase in probability as we close within the initial range or we close above the 930 candle, the high of this basically. First push down, second push down, third push down. Okay. If I analyze that who is making money, bears who bought the low, who sold the low, like 1 minute. Bears who sold, putting their stop order here, they are like they are enjoying their profits, right? Bulls who bought this low, hoping that we would not close below this low, they got trapped. See this point, we have a gap here, this narrow gap. They got trapped here, never got a chance to get out break even. If they, let's suppose if someone bought here and they bought more lower here, right? So their standard deviation stop loss would be right around here and they got stopped out. This is the negative of a trade. They have gotten stopped out right around this point. Bulls who got stuck here, they will get out once with the price reach around this point. Okay, we have 1.27 minutes with the first leg up. This is the second leg. Let's see how the second leg performs. If it fails, or in other sense, if we close above this high on a 50 or 5 minutes or not. If it fails, it means that we are failing to close above this high and we can continue. 50 seconds left. We are retesting the open of the day and the initial range. Let's see if we can get a close above this high. Now we fail to close above this high. This can potentially fail and turn into a bear flag again. But keeping in mind that we are okay, job openings. What happened to job openings? I thought I thought that would be volatile. See how this is performing now. If we close below the previous day low, I can take a short again. Potentially, this can be a potential trade. If I take a short, for example, if I take a short, putting my stop loss right around this point, this is a potential low too short. Just aiming for this point, the low one, the low of this bar. That would give me around 1 to 1 risk to reward ratio. I have already gotten 1 to 1 risk to reward ratio on the initial move. I am trying to take another trade, hoping that we might reach the low of this range. 15 minutes, see how 15 minutes close, right? 15 minutes is allowed to come back down to at this point. We got another, this overall is basically it's a range. If I remove all of this drawings, this is a range. Aha, we got a close above and immediately goes below. So what I said about this trade, that we have a 95% chance that this was the first candle of the day. We will take out the first low of the day because it was imbalanced. So it made it more probability. If it wasn't imbalanced, I would have said that there's basically an 80% chance that we might take out the low of the day, because in every day, the first candle has a 80% chance of getting touched high and low. Like the first candle is not the high or the low of the day itself. Okay. Let's see if we have gotten our. I am getting out again. No, 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 no. It's not. I'm targeting this point. This is my target again. Okay. What can happen? We see this point. What can happen? We might take out. We might touch 18, 418, and bounce back up. We might. Okay. All right. I think my job is done. I have gotten 1 to 1.5 risk to reward ratio, and it's good enough for the day. Thanks for watching. If anyone's watching, bye bye.